welcome to the Build and Exit podcast. I'm Julie Wilkinson. I launched the podcast off the back of the work I do in my company, Wilkinson Accounting Solutions, because I saw there was a real gap in the market for need and support for entrepreneurs, well, in the UK and across the world, in understanding how to exit and acquire businesses. So we've got an exciting episode today. So I'm really excited to have Astan M with me. Hi, Astan.
Hey, Julie. Thanks for having me.
Hi, no, thanks for coming on. I mean, we're real privileged. Astan's a big name in the market and can't wait. But we're doing a bit of a role reversal today because we've had a lot of people ask about my acquisition, the asset sale. So we thought we'd switch it around a little bit, flip things up. And Astan's going to be interviewing me. So this is going to be exciting. But first of all, Astan, I thought I'd hand over to you just to tell a bit about yourself and why you wanted to come on the pod.
Absolutely. Thanks so much, Julie. So, I've been in business now for pretty much my whole working life. I was a lawyer by background, but a terrible lawyer. I think is the right way of describing me. So I ended up selling things to lawyers instead. I found I was better at selling than I was at law. That was my first agency, which I sold in late 2017. Having a taste of exit was really interesting experience for me. So I think from then on, I was always driven to build up businesses as assets rather than a business that's, my little baby that I keep forever. It was very much asset driven for me. So I've been in the game long enough now where we've launched and I've grown quite a few companies. I've also failed at even more. That just doesn't get so much public attention. And my last but prior exit was a roll up. It was actually a small business roll up, which is rare in the industry. It's quite hard to do those. It was a very niche and specialist roll up that I exited in 2022. And then I've just done an asset sale as well, which we publicly announced last week or the week before last. So that was the last exit. So yes, I've been in the game. I've had quite a few exits, which is brilliant. I've also learned a lot from those, and I'm happy to be interviewing you here, Julie. Thank you. It's actually a privilege that you're letting me interview you on your journey. And of course, this is just one, I'm sure, of many times that you and I are going to get together and produce some great content for the listeners.
Absolutely. So, are we ready?
Let's do it.
What do you want to know?
What do we want to know, Julie? Okay, Julie, thank you so much, first of all, again, for letting me interview you. So I think this is a great opportunity for you. I know you're normally the wonderful host. It's hard to talk about yourself when you're the host, but now is your time to shine. I think there's many people that are going to listen to about your journey. I thought actually, Julie, before we talk about your acquisition, why don't you just give it must be hard when you are the host. You can't give a more detailed background of yourself and, where you've come from. When I first met you, I thought your background was quite astonishing. Actually, you've achieved so much, and I don't think you put that out there. So why don't we start at that place, if you're okay? Why don't we start before Wilkinson's Accounting and how we got to Wilkinson's Accounting, and then we can talk about your acquisition, if that's all right.
Yeah. And I've been interviewed. I remember I went on TV and actually did an interview, and I like to talk a little bit about my history as a child as well, only because I think it shows people what you can achieve. So I didn't go to university, which I think people are quite shocked about because people think, if you become an accountant, you have to go to university. I didn't. And actually, I'm quite open about it. I had quite a bereavement when I was a child. So my mum passed away when I was 14. So I was okay at school. I did okay at school, but I think I didn't really know what I wanted to do. Anyway, I actually went traveling for a year when I was 18 and sort of came back and went into finance. So to cut a long story short, I spent 7 years studying in corporate. I spent 20 years in corporate. And I like to share this bit because I think it just shows that I was quite late as well. I don't think I even started the study till I was maybe like 25 or something, which is obviously quite a bit later than school. And I just did it on the job and ended up becoming a chartered management accountant. And I actually did a talk with one of my companies in front of maybe like nearly 1,000 people because they asked me to deliver a speech on my journey because I was actually only one of 2 people that ever chartered in that company that wasn't through the graduate scheme. So they used to take people for university. So anyway, I went up in the corporate ladder. And a bit of background behind why I started my own company was because, my husband had been telling me for years, and a lot of people don't know this, but I actually started a CV writing business on the side when I was working because I just wanted to see how entrepreneurial I was. I didn't come from an entrepreneurial background, so my mum actually didn't work, and my dad worked in a normal job, so it wasn't like I was used to that. So I was just used to 9 to 5. So I started the CV writing business just to see how I got on. And it actually took off quite well. I did about 100 in a year and I actually ended up having someone writing for me. So that made me realise I was more entrepreneurial than I thought. And then because I've worked for big corporates, I did a lot of projects, especially towards the end, a lot of like big projects. And one of those projects, I actually had to integrate 3 entities into a group entity. one of those entities had been acquired by that entity quite a while ago. So I wasn't involved in the acquisition, but my role was to go in and streamline. So I went into this business, and I suppose that was probably my first ever insight into a smaller business. So although it was probably around 50 mil turnover, that was partly because of the intercompany. I suppose if you switch that out, they would have been just a standard family run SME. And then, standard, the husband and wife owned it, the daughter worked there, everything. And it was a really good business. But what I realized was there wasn't a lot of processes. And that quite shocked me because although, people say, oh, corporate red tape, the one thing they do have is structure. Corporate businesses tend to have good structure. Whether they're ran well or not is a different story, but the structure is quite good. So that was what I put into this company for it to eventually go through this project. Anyway, as I went through this journey, I thought, God, if this company is struggling, then what does the average business do? Because obviously I hadn't worked for lots of different businesses. I just worked for big corporates at this stage. So I did a survey, and I asked 20 businesses what their accountants did for them, and 100% only saw their accounts once a year. So I thought, goodness, why are people not seeing their accounts? So when I delved into the accounting industry, it took quite a while, but the long and short of it was I felt I had a skill set that a lot of accountants didn't have because, it doesn't matter what you study, to be fair, a lot of people can pass exams. Some of it is technique based, but you can't teach 20 years experience in a corporate supply chain experience, and account. And I do feel the accounting industry has quite a poor level of service in the UK in general. So anyway, that was why I launched into it. And then acquisitions just came into what I enjoyed throughout that journey. So I did the first 2 years, I just did a load of consulting, FD roles and stuff to see, and acquisition was the area that I really enjoyed. And I think the main reason that I'm so passionate about it is I just don't think there's enough businesses in the worldwide, but in the UK specifically, I'm focused on, that are maximising sort of generational wealth. They're running good businesses, taking good salaries, but we're all living in the world where we're being taught to spend this money and nobody's investing in themselves. And they invest in things that everybody knows about, but sort of more inner work. And, they're not leaving legacies necessarily that's easily pass generational. And that's how I think we're going to make a better society longer term for our younger children, is to have a more entrepreneurial society where people have more opportunities. And that's one of the reasons I'm really passionate about doing it.
Wow, what a story, Julie. Thank you for sharing that. Firstly, very sorry to hear about the passing of your mother when you were younger. That's very sad, and it's great to see that you bounced back. How much would you say your background and the fact you didn't come from a non-traditional background has shaped you to become, the business owner that you are today? Do you think that's been super important, or do you not think it's so relevant?
I don't really think it's relevant in terms of the context of what I've been through, because a lot of things, but I think the one thing you do need to have in life is just be humble, I think. And maybe my background has got that because, that's one of the things I can bring to a lot of people in organizations, because I've worked in pretty much every role in finance that you can have, be it being own an accounting firm now or employed. I've worked on the ground as purchase ledger. I know what these roles are like for owners, but I also know what they're like for all the people on the ground. And, a lot of the issues is a mix of maybe people not having the right skill set, but also owners switching people's roles all the time and not focusing on the right controls and the right processes at the right time with the right people, which is part of the reason things don't deliver. And all that can change, with the right controls, processes and people. It can change a person's life, because in the end, that owner can still make the money that they make without having to do all the hours. And part of that is probably guilt in themselves that they think they have to work a lot, but also sometimes there's non-investment in the business at the right stage, because they're so, they're thinking, oh my God, I need the money. I'll take this money, and they might not be consciously thinking it, but I think subconsciously it's there. So, yeah.
Absolutely. Okay, great. Well, thank you very much for sharing that. I think your listeners will be really impressed, and we're all very proud of what you've been able to achieve. So well done in that respect. So let's talk about the acquisition. I'm here to talk to you now about the acquisition that you did. So if you could start off by just giving a brief background, I think it'd be great to understand more about the structure of how you approached, even contemplated doing an acquisition. And then if you can go into the finer details, and of course, I'll interject when there's some relevant questions to ask you, if that's good.
Yeah, definitely. So the reason I did so, it was around mid 22 that I hired my group CFO, which was a pretty big hire because at that point we were just making the decision to launch into acquisitions, and obviously I suppose I took a bit of a risk because it was a big salary, and we were building the pipeline, but I mean nowhere near to the level of work we do today. But I just could see it because I just knew the need was there. Anyway, so when we decided to do our acquisition and exit products, which we have, and I think currently right now we're working on about 7 deals for buyers. So we do a lot, and obviously with exit planning as well. But to do that, we realized that it wasn't really just the senior consulting that we need. We wanted to have the back office services that can really offer sustainable support to businesses longer term, because there's that my view is you develop, implement, and then it becomes business as usual. And how does it become business as usual if someone goes off the scene and then they can't then implement the business as usual? But really to do that, yeah, we could have done it organically, but I suppose I'd already had 2 years of organic sort of doing consultancy. And maybe I was quite early on into my business than some people in build acquisitions, but I think obviously because of my background, I had a lot more a higher understanding of being able to do it just because of what I'd been involved in. So yeah, that's what we decided. We decided to bite the bullet and do an acquisition. So I didn't necessarily know at first what type. And I know a lot of people say they go through hundreds. And to be fair, actually, we didn't. We found a deal that was of a good size. That was challenging, but there was a few reasons why we chose to do it. And in the end, we ended up doing an asset sale, not a share sale. The reason we did that was because the business was a smaller size that there wasn't really any major assets to make use of. But it was of a small enough size that we felt that we could bolt it on to our existing business. And to be fair, we didn't maybe have all of the infrastructure in place, but I knew that would force me to speed up the infrastructure and get the things in place to do. So that's what we did. So yeah, we ended up finding one, and we ended up closing the deal around March 23 it was.
Okay. Well, what was the time span then, Julie? So when did you start the search process, and what sort of time span are we looking at? So you concluded in March. So when did you start the process?
Wow. I'd already had, because I was already within the industry, I'd had some deals come through before I'd even really decided fully to do it. So I'd started to look at some. So it was around sort of early 22 that I'd been starting to look. And then to be honest, I think, well, I always think everything happens for a reason. The deal had already kind of landed. I can't remember exactly the time frames, but the deal had already kind of landed when I acquired the group CFO. And when they came in and also looked at it, I was like, actually, yeah, it could be a good one. We kind of just spearheaded it there. It didn't actually take that long because we did the asset sale when it was a relatively small business. I would say we had kind of done most of the DD sort of by the end of the year, but because of the tax season, they didn't want to go and the requirements. We actually left it until after the Jan, the thing, and then we ended up doing it, around the end of March.
Right. Okay. Okay, great. So before you said, when we look at deal origination, you say some buyers often go out and look at hundreds and hundreds of targets and you didn't. So talk us through kind of that thought process and why you didn't end up going through hundreds. Do you think was that normal, and was that expected? Was it intentional on your part?
No, it wasn't intentional. I mean, I had seen quite a few because I'd also got some other partners and we'd looked across the years and things. So, I mean, probably in total, I probably have seen around about 100 accounting acquisitions, but not all that I was actively searching. And to be honest, some of them I just didn't even look at because they wasn't part of the criteria. So I didn't intentionally not do it. I understand, especially if you're going for bigger deals as well, it can be harder to find the right ones. I think for us, the right one just landed. The reason for us was sort of the price point and type of customer and industries that the clients were in. We felt like we could really bring some support to that industry, and it was sort of perfect for what we were looking for. So I think it was just a bit of meant to be. But it was a bit of luck, wasn't it? It's luck what comes through the door as well. But obviously I do get a lot of them because of all the network and stuff that I had. So I didn't intentionally not look for loads. I just happened to find one that we felt was, well, I don't know if you could ever know if it's the right one. And obviously we'll go into what happened because I did probably do a really hard deal for the first deal, but I'm pleased I did it.
Okay, well, let's not stop the flow. Let's go into that first, and then we can always come back to the pre-acquisition. Let's carry on the flow then.
Okay, so basically we did an asset sale, meaning we only brought over the customers and the staff, so we didn't buy the full shares. So there were some complexities around that. So and I know we're going to do a webinar, aren't we, asking to go into more
Absolutely.
of this, but the summary was to do the asset sale, we had to send out all new contracts and things to the clients because they had the choice whether they wanted to come over and such. So we didn't bring over the old owners, not as such, to physically work on the deal, which was obviously a big risk because especially within a professional service industry, a lot of talks is, especially from the accountant's mindset, is always they want to work with me. And this comes back to, whether it's in the accounting industry or not, when someone's looking to exit, that's a mindset thing. And I want to see, well, if I brought over 100 clients without the old owners, would it work? Because everyone says, it's the relationship that's important. Well, we brought over around about 100. And since they've signed the contracts, I think we've still retained 95% of those. And the old owners haven't even been, well, they've been great. I'm not trying to say they haven't helped us behind the scenes. They've obviously answered questions to they've been great, like that type of way. But what I mean is we didn't do customer facing with them, working with the clients like they would have done before. And alongside that, we've managed to systemize a lot of the clients. And, now a lot of them are going on acquisition journeys and thinking about exit planning and this type of thing, because I just think sometimes you need to meet different people in your life that open your doors to different things. And that's why I'm so passionate about helping owners, because, you don't even have to be 7 or 8 figures at the minute. There can be good businesses that are about $500,000 turnover, maybe even a bit less than that, maybe even $250,000 that actually have the ability. And the earlier people do it, the better, so whether that means acquiring to speed the growth or not, that's a choice. But I think the exit side of things, I think a lot of people that aren't doing it can do it earlier on, and many more businesses will grow to a higher scale if they do it.
Absolutely. Do you feel like, Julie, in terms of the clients that you took over, I mean, that's the cliche advice, isn't it? Relationships are really important. It's the relationship that holds the contract up. And as you say, you brought them across and 95% have stuck around. Was that a learning point for you? Like, were you expecting that? Would you say 95% were you confident you'd be able to retain those, or was it very much trial and to some extent error, but fortunately not a big error exercise?
Well, I think we actually retained more than we thought. I had about 75% in my mind. It was the first one I'd done. I'd obviously done a few research statistics, but you don't really know until you do it. So I think we actually retained more than we thought we would, which is good. Has there been a learnings? Loads of them. I mean, I've been involved in probably over 100 deals now in all different types of acquisitions with all different industries for other clients, and, through the coaching and stuff that I do. And every time you learn something new, I don't think you ever stop the learning. So for me, this was obviously relatively on in the journey as well. I don't really know. Nothing's gone majorly wrong. We brought in the right team. So we had, a HR specialist to help us with the 2P. We invested in the right legal teams to help us with the asset agreements. So we had the right warranties in place. So there have been things that have happened, but there's never caused an issue in terms of relationship or anything like that. I think probably with bringing over clients without the owners, obviously building that relationship and, what the client's expectations were. Because prior to that, we hadn't really got a lot of retainer clients. I'd actively done that because we decided to buy them, not grow them effectively. But I think learning, what customers' expectations are for, their accounts and what they want. I mean, that's been a big learning curve. But I think we would have had that learning whether we'd grown them organically or acquired them anyway. I think for us, the biggest learning, I mean, we're fully virtual. We don't have an office, and we probably got somewhere between 7 to 10 staff within a 6-month time frame. That we not only did we have to acquire the 100 clients, we had to also onboard all the staff and do everything like that. So yeah, it was definitely some learning curves. And I think doing now where I am, whether I could have done anything differently, indeed, probably I could. But I don't know if you'll ever know the full relationship of every single client. I don't know if that's possible. But the learnings you get across the business journey mean the next time, if you it will be easier because you'll know how to handle and adapt quicker, I think, in the process.
Hi, everyone. I'm really excited to announce the new sponsors of the Build and Exit podcast, Acquisition Masters. Acquisition Masters is led by Ollie Luke. and Clive Margits, who have a wealth of experience across buying businesses and also successfully exiting. Within the network, you get access to free tools and resources to help you on your acquisition journey, and also a network of inspirational entrepreneurs and business owners who are going on the same path as you, helping maximize generational wealth by growing businesses through acquisition and then also building successful businesses for exit. I'm really passionate about helping business owners maximize their wealth on exit and building generational wealth. And my relationship with Clive and Ollie, I think they're really ethical, and I love the approach that they're taking to the network and their overall aim of acquiring 1 billion of acquisitions in the next 10 years. If you want to find out more about what you can get from Acquisition Masters, you can click the link below. And I'm really excited that they're part of our journey, and I look forward to seeing you again soon.
I'm very curious about when the sellers, how did they explain their relationship with the clients? Were they there giving you confidence to say, we have a good relationship, but we believe, they'll be absolutely fine? Or did they have concerns? Because I think that's probably quite a common concern for sellers, right? That when someone's trying to sell their business, particularly in a services-driven organization, one of the concerns is, we have the relationships we think they're going to go. It's going to cause many problems. So I'm curious, how did the sellers address it in your transaction?
Yeah, I mean, I had a pretty good relationship. I think, most sellers that have built a big company over a long time of years, because, they've had a lot of these clients for a long period, they always have a bit of concern because they want them to be looked after. I mean, in the particular case of the acquisition we bought, it was quite old school accounting. So they used to actually go to clients' houses and have cups and teas and sign off the accounts. And obviously that was never really something that was going to be, we visualized as needed in a business model, because the value you can bring these days isn't even really transactional as so much, apart more explaining accounts and getting, because for me, businesses grow when they have financial literacy. And I do think accounts is a really important part of that, because you've got to have good information to get that. So, yeah, I mean, so we never really had any negative conversations about it. And they always said they'd be there. And so they were there to sort of help that relationship. They helped sort of behind the scenes of their relationship. And, because obviously in the first 6 months, we had to kind of also rely on them to help them come over as well. Because, we didn't have any sort of negative conversations. I think probably there was a bit of concern about would the clients want to go digital, do they expect people to go over to the house, because we didn't have an office, to have the sign off and things like that. And we've never really found any of it. Don't get me wrong, we speak to our clients a lot, and we would always do that regardless of whether we had acquired or did it organic, because I just think, people need to be able to contact and ask questions, because nobody just won. So we would always have done that. But we can do that, and actually you can do that better virtually. We have client managers that look after the account. They have WhatsApp numbers, so they can WhatsApp, if they've got questions. And we've obviously, we would always, our vision is we always think that account should be done sort of within 6 months of the year end. But obviously, ideally, when people are on systems, you can have a management account relatively quickly after the year end, and then it's just a formality to do the accounts. And that's something we've actually done the first couple now within 6 months. I mean, it's taken that long. It's taken 12 months, because when we acquired it, they were always on the 9th month. So when we actually took on the client, we were like 9 months behind. So we had to catch up. So and that has taken, a good 12 to 18 months to do. But because we're now on systems with a lot of the clients, the next sort of 12 to 18 months, we can see the benefits that will come from their manners, because it doesn't benefit anyone, stressful last minute accounts, and it's just completely unnecessary, really. And we liked to be able to see, we can turn this around and help people get better information, and then see that they've got more opportunities in their businesses rather than just continuing trading, as they always have.
Yeah, absolutely. Okay, great. Would you say then, for you as the buyer here, two of your critical concerns or risks were the people that you were taking on, and then presumably the contracts of the clients, right? I'm sure, a lot of the deal terms are confidential and private, but is there anything you can share for the benefit of the listeners as to how you de-risk those two key areas in terms of the people and the clients? Did you do it through deal terms? Was it just making sure enough DD was done? Was there a lot going on behind the scenes before you signed the deal? Or was it just very much an educated negotiation in bed that it was going to turn out well?
No, we did have like warranties in the deal, because we had an agreement with the seller. Because I just think it all comes down to relationships and negotiations. Nobody should really favour it in form of one other person. I think in an acquisition, when it's a fair sale, both people warrant, and I'd never be able to try and get one over on someone or something like that. It's just not. So we had fair terms in the warranties of basically, we needed time to build relationships with the client. So the sellers offered to say, look, they would be responsible for a time frame of the clients coming over. And then obviously we had we'll actually own the acquisition this summer because we had a 2-year deferral. So by 25, we would have owned it. And within those 2 years, even now we still have some contact with them, very minor now, that we do. But yeah, so they've been great in handing it over. And we did have warranties in terms of when it would transition from sort of their responsibility for the client to come over versus our responsibility of keeping that client happy, because obviously there is a bit of like, well, who could be at fault if a client leaves and things like that. So we had as many, like I say, we used this to get everything in that we felt was fair for both parties. But the relationship we've had since then, obviously I won't share them because, like you say, it's kind of, I won't share confidential information and stuff. But things have happened. But we've just had conversations and we've come to agreements. And I think across the thing, both parties have been fair with each other, and we still have a good relationship now.
Absolutely. Great. I think that's something that a lot of buyers and sellers seem to forget, that there's always this commentary in the market, right, about getting the deal for the best terms or as cheap as possible, and you forget that there's often more than just a single transaction going on, right? Before the transaction is complete, there's a lot of to and froing during the transaction, and then often post the transaction, right? There's a big relationship there that you need to build between buyer and seller. And as you said before, it's not about getting one up, it's trying to find the fairest terms where both parties win. It seems to be that you've done that very well. In your experience, Julie, outside of your acquisition, would you say that's normal or not? Would you say that most of the acquisitions you've advised on, you've got very fair parties, including their solicitors for that matter, acting fairly in the interest of each other, but trying to come to a mutual outcome, or not? Or do you think you've been an exception to the rule?
Well, I think the buyers that we work with, and we have a good a high network of people like brokers, solicitors, HRs. And I think, to be fair, the people in our network, because we will only work with ethical people, the buyers we work with, we haven't seen many major issues in terms of, there have been hold-ups and things, maybe funding's fallen through or accounts have come out and there's been renegotiations on values and stuff. But when people have good relationships, those things aren't a problem. I think I told you once, I used to probably get about 30 buyers a month approach me, and I used to have a lot of calls every month, sort of 30 to 50, and everyone was signing heads of terms next week, and everyone was getting a no money down deal, and we all talk about these courses, don't we? And I just think I don't have as many of those conversations anymore, and I feel for the buyers, because I don't think anyone is like intentionally trying to lie, but
Sure.
I think sometimes people are being misled, like how easy it is, because what's happening is people are being taught you can buy a deal with no money, and theoretically it's true, you can. I've seen it happen, and that's fine. But there is a difference between having no money and getting it and having to have the deal with no money versus having money and strategically negotiating a good deal for both parties. That they're completely different things. So the people that are often teaching or do the deal with no money down, generally they're quite successful entrepreneurs where they probably have a high level of wealth behind them. So once they close the deal, they might not have paid anything for the deal, but when you close a deal and you have a spare 500k in a bank account somewhere that you can just transfer across because, trading's gone down and you need some cash, then you haven't really done a no money down deal, have you? Because if the time you need the money normally is for the working capital in that first 12 months of a business. And if you could just transfer money over, then I think it's unfair to go, well, I've got a no money down deal. And rightly so, because, why would a seller want to sell to someone who's got no skin in the game? They've built these businesses and they're risking not getting paid for a deal, aren't they, if it goes under? So firstly, can you actually run the business is what the seller's going to be looking at. And I think rightly so, like, why wouldn't they want to know that you can keep their business running for their wealth and for the legacy of the business that they've built? But also, so you don't go from a house and try and get 100% mortgage. They just never give it to you. So I think there's I don't generally believe there's a lot of dishonest people. I'm not saying there aren't any, but I don't see many dishonest people. But I think there can be, you've got to go in with your eyes wide open, because, you know, you can't do it in 30 or 60 days. Especially, you know, some people can do it quicker than others if they've got experience. And I probably did it relatively quickly, but I had a good experience. But if you've never really done it and you're not financial minded and been involved in a transaction, then obviously you need more money because you need more professionals to help you.
Absolutely. I think we could do a special podcast, Julie, on no money down deals, don't you? And we could go into detail as to why very rarely do it. I agree with you fully, though, as you know. And I think it's great marketing, isn't it? It sounds like a good marketing spiel to say no money down, and that will attract a certain type of buyer in speech marks. But yeah, the reality is all it is about reducing your initial cash exposure is a very different thing to doing no money down deals. But yeah, we can probably do a special on that next time. So when you look now, Julie, so you look at your acquisition that's effectively nearly completed now, including the deferment. And you're very well experienced. You really know your stuff. But as you said earlier, we all go through acquisition and we learn afterwards, either buying or selling for that matter. Using this deal specifically then, what would you say, speaking openly and honestly, are the things that you've learned from going through this deal that, you know, you would say actually consciously you probably weren't even aware of before you start the deal? No matter how small or trivial they may be, these are the real learnings, right, that we get from doing them in practice. Do you mind sharing some of those if you've got them?
I think I would be not bringing over an owners would be something I would question again. I mean, I did it and it worked well and it was fine, but I'm not, you know, but it was hard work. I'm not going to lie. So I'm not going to pretend and sit here I wasn't involved, you know, because there is a balance between, I know I talk a lot about exit planning and the owner not working in the business. And to be honest, I did do that alongside the acquisition. It's one of the things I did focus on. And probably now I do probably only still, I do work in the business, but I probably have managed to get it to about 50-60%, which obviously I still think is quite positive considering we've done an acquisition without the owners. But I do think there can be a benefit to having the previous owners involved, if they're still involved in the business, obviously, or obviously if it's not the owner, the leadership team then, should I say. Because it wasn't so much just, I don't think it's so much just the clients, you know, that was okay, but it's just kind of like the processes and what the staff are used to. And I think operations can drop post that, even if you don't lose clients, processes and I suppose how people feel, like staff and stuff, you know, they can get demotivated and things like that. And that's its own challenge in its own right. So I definitely think the need for the leadership team or the owner or whoever is the key people, just having a good relationship and not trying to like dictate, you know, I don't know if people would have to tell me. We do have good relationships with our employees and we have strap days and stuff. And I like to think that people can be open and tell us, you know, if we have done that, because obviously you can't always see it yourself, can you? But I know just personally, I could see if I look high level, that obviously the people that own the business for just bring a real benefit to the knowledge. And even if the longer term plan is to dwindle them out because they don't want to do it anymore, whatever, that's fine. But they can be the people that do that, can't they?
Absolutely.
So yeah, and I think, one of the biggest learnings is the now people that want to have more financial education and systemization, because obviously we did have a lot of sort of negative, or not necessarily from anyone involved in the acquisition, but just across, will they want to go? They won't want to go to systems. You won't be able to get people on systems. Yeah. They're old school. They like this. So I think what really opened my eyes is the mindset if you've got to go with what you really believe. Because it hasn't happened. It's not, if anything, it was go a complete opposite. It's not from everybody. Okay, some people, you know, not everybody's gone over yet. And obviously I know Tax Digital was coming, so one day everyone will have to, but regardless, it's how people feel. But what I've realized is I don't even sometimes think owners know that they need financial education. And I think I think an ethical obligation of sort of a financial accounting firm or someone, you know, that's helping you do finances is to help people open their eyes but and truly understand their business and the finances, not just from tax and not just because, I have just a bit of return a year, but it's their, one of the values we can bring is the legal obligations that people have in businesses, you know, to run their businesses. Because, you know, I talk a lot about corporate governance, which is another probably whole episode. And like, I just think owners are buying or running these businesses with no real understanding of what, you know, what are serious risks in businesses. and what are their legal obligations as owners, and what are their ethical obligations as both and owners. I don't think people are intentionally doing it, but they naively just I can just do this, I run my business and it grows massively, or they acquire into it. And I have seen some things, not our parts necessarily, but just in general across what I've seen some businesses how they trade, and I'm like, serious negligence or fraud, or can land people in prison. And
Absolutely.
I think, I think that's and this is where people don't really realize what a finance team can deliver, because they don't know, because accountants just do bookkeeping and tax. But when you're bigger and you invest in the right finance team, whatever the role is, things like corporate governance, risk and controls, and accounting all go hand in hand, because it's all part of becoming financially literate and understand the biggest risks in the business.
Absolutely. I think that's what's great about your story here. When you first told me about your story, Julie, which was that you guys went in with the acquisition with a really quite a bold vision. But what's fascinating is most people talk about acquiring and say you acquire the clients, that match the current clientele that you have. So you can bring them in the system and easily serve them. And it acts like it's all smooth and it's easy. And actually what you did is you had a vision with these clients. It wasn't necessarily there, because you say they weren't all digital. They didn't all buy into this. They were still having, their meetings with cups of tea and everything else that matter. And it's great to see that it was that confidence in your vision really here that pulled you through, which I'm sure you'll agree with. Do you feel like many buyers have that? Do you think too many buyers go into acquisitions feeling like it's just something that should be done, that they have to do? Do you find that buyers have that, bigger picture mentality to go, this is actually a form of an investment. This is a growth vehicle. This is a way that we can make 1 + 1 = 5 rather than 2. Do you see them often, and do you think it's common?
Yeah, I don't know. I mean, I'm quite a spiritual person. I mean, I do a lot of journaling and meditation. So sometimes I see this more outside of just business in general. I think as people, deep down, we all want to better ourselves. And generally, there's something we want to bring to the world, I think, is the answer. And I do think, some people are stuck in 9 to 5 jobs, or if that's not in a job, perhaps you've built a business where you now feel like you've got a 9 to 5. And I think a lot of people are looking for acquisitions as a way to expand, change that life, which I think is right. I think that is a good way to change it. But I think the reason, my vision when I did it wasn't just because I wanted to make more money. I did want to help the client. And obviously, yes, you get the wealth and stuff that comes from it, but I didn't intentionally bring clients into society all because I can charge them more and do it for quicker. It wasn't really for that reason. It's an output of it. But it was mainly because I truly believe that so many business owners can have such good lives and maximize their wealth. And I felt like this was a way to start that journey. So I do think buyers can go into transactional, because I think you can make the deal work. Of course you can. But what are you trying to do it for? There'll be a longer term vision of financials, what you want is there, but what are you going to do with that money? Like, what are you trying to do for the wealth with that? And I think for me, that's an important point in my own journey. And I don't know whether enough people really do that sort of thinking more holistic really of why they're trying to achieve it. And I think it does make a difference, because when things go wrong, which it does, and it always will, because there'll always be problems and challenges, it's more about how you get through it, I think, is because you can still see it, and if something goes wrong in that acquisition or whatever, then the next one you do will be even better, won't it? And it will move you towards the goal even further. So I do think people are too transactional, and I'm not going to sit and pretend I'm an educator in this thing or qualified in it, because I'm not. It's just what I believe as going through that journey myself, and sort of the spiritual side of the journey that I've been on. I think it's quite important to have that vision.
Absolutely. I think that's something that we share and we have so much synergy over, which I absolutely respect. And that comes down to a lot of founders and business owners that don't ultimately have a vision, right? They feel compelled to do what they're doing, but they don't have that bigger vision. They don't see that they're stewarding something that should be able to bring value more than just themselves and in their back pockets. I think it's great to see that you actually took the approach with your acquisition with that bigger vision in mind. I think that's a really great learning curve for many people looking either to buy their first business or to sell their business, to understand it. I think that becomes a very necessary component. So it's great to see that you are a big advocate. You've put that into practice. So great. I think you've shared so much from your story already, Julie. So is there anything else you think you want to share for the benefit of your listeners, or anything else they need to learn? I know that they can always reach out to you, and there's lots of information and intel that you can share with them directly.
Well, I mean, I'm on LinkedIn. I'm Julie Wilkinson, Profit Queen. That's why I can't be verified, because obviously I'm not really Profit Queen as a surname. Well, whatever. I know that the podcast, I get, we've had so many downloads. I get messages from people all over the world, actually, that say like how it's changed their lives. So I love it. And I've got a massive network of who I think are really skilled and, great people in not just in acquisitions and exit, but in business. And the one thing I want to share, Astan, is obviously we're going to do a webinar, aren't we, on the 14th of March with another partner as well, where we're going to actually dive into more of the intricacies of asset sales, and we'll start looking more at the legal things of 2P and taxes and buyers and sellers benefits. So I thought it'd be worth mentioning that, because this is likely to come out before that. So yeah, and what do you think about the webinar? I want to share anything?
Absolutely. No, I'm looking forward to the webinar. I think there's going to be a lot of insights, very real, which I think is the thing. Well, it's great with your podcast and the content you put out, Julie. There's too many people teaching and not enough people doing. And I think sharing real stories is just so critical. There's nuance and subjectivity you could get from undertaking an acquisition or selling your business. And unfortunately, what I call the corporate theorists seem to miss this. There's a lot of textbook theory. A lot of that doesn't apply in reality. So I think the webinar is going to be great. And I'll be happy to share my prior 2 asset sales stories, actually, and a lot that I learn from there. So I hope that will benefit your listeners. But above all, thank you for sharing your story, Julie. I hope it was good to be a guest, and I hope I did you justice as a host.
No, you're brilliant. Thanks, Astan. Thank you so much. And just to end, I just want to thank all the listeners. We launched our first episode of 25 the other week, and I think we're now over 16,000 views and downloads, probably going up towards 20,000. So I think it's brilliant. So if you like the show, hit the subscribe button so more people can find it. I look forward to seeing you soon.